How's it, traders? In this video I'm going to show you how to chart support and resistance for BTC. This will not only work for Bitcoin or crypto, but it will also work for commodities and stocks. Many traders and most professional traders use support and resistance on their charts to find entries and exits, and this is the basis of finding confluence for all your trades. I wouldn't suggest that you use only support and resistance levels for your trading, but use support and resistance to find confluence to enter and exit trades. When I say confluence, you got to draw Fibonacci levels if that's how you like to trade. You got to find trend lines that intersect where your support and resistance levels are, possibly finding bearish and bullish divergence. Now in the next couple of videos, I'm going to show you how to draw Fibonacci levels, how to draw trend lines, how to spot bullish and bearish divergence so that you can find confluence to enter and exit trades. If you like that kind of content and you're interested in finding out how to find confluence to enter and exit trades, please smash the like button, make sure you subscribe and leave a comment to help me with my YouTube algorithm. Let's get into the content. I feel it's very important to accurately define what support and resistance levels mean. And I often refer to Investopedia. So I'll put a link in the description to this article so that you can go and read this article at your own time so that you can really cement these terms and cement the basics of support and resistance and implement them within your trading strategy. I want to highlight the key takeaways. Support occurs where a downtrend is expected to pause due to concentration of demand. So demand is where a lot of buyers are accumulated and they're expected to buy, and you'll see a rapid rise in price. Secondly, resistance occurs when an uptrend is expected to pause temporarily due to a concentration of supply. Of course, when there's an overwhelming supply, means there's a lot of the asset being sold into the market, which pushes the price down. And we're going to look at that on the charts. Extremely important to start out with to be able to chart support and resistance for Bitcoin or any other asset. You're going to need a charting platform. I use Tradingview. I've got a link in my description. You can register for free and you can do everything that I do on my charts for free. You're just limited with the amount of indicators that you can use. You're not limited to how many support and resistance lines you can draw, so please use the link in the description. It will really help your trading going forward and help you to learn to become a more profitable trader. So remember, the definition of support is that it occurs where a downtrend is expected to pause due to concentration of demand. So let's look at that on the chart. You can see in this chart, Bitcoin had a downtrend and had a rejection at this point and had a point where there was a pause due to a concentration of demand. You can see this is definitely an area of support. Why? Because price came down, hit that area, went up, came down, hit the area, went up a couple of times. So this is a very good area of support. And if we look left, always important to look left on a chart, you can see where this level was respected before. Right here we had a point where price paused and reversed, right there again, right there again, and that was a bit of a resistance previously. So you can see if we had to draw a line straight through all of these areas, that is a very good place of support. A recap on resistance. Resistance occurs when uptrend is expected to pause temporarily due to concentration of supply. And we can see that on the chart here. If I go and look at this point here, you can see the price reversed a couple of times when it hit that resistance points. So we can actually say this point of support and that point of resistance that Bitcoin has been trading in a range. You can see it hit resistance, came down to support, went up, hit resistance, support, resistance, and it's currently very close to support at the moment. If we look at another place on the chart, we can see Bitcoin came from this point of support, bounce of support, hit a point and came down, hit support, just broke briefly, came up again, faced some resistance in this area, and you can see that there's the same area of resistance going through. So looking at the chart a little bit further on, we can see that that same point acted as resistance. If we had to draw a line straight through this area and see there. So there was an area of resistance, came and tested and broke through the resistance. This was obviously flipped into support, and I'll explain that in a moment, and came down back to this area of support, which is a previous area of support. Often what will happen, if there is an area of support that gets broken, once it breaks below that level, that area of support actually becomes a resistance. And this is an example here. There was a previous area of support, and you can see that it broke to the downside and consolidated for a while, came up, hit this area that was previously a support, now became a resistance and rejected there. And again, there it broke that area of resistance and it became support for a little while, broke it again, became an area of resistance, broke it again, until it broke through till the upside. The same applies for areas of resistance. You can see here this area of resistance was broken, came to an all-time high, came down. That area of resistance actually acted as an area of support for a little while. You can see price bounced off there, a little bit of a bounce there until it broke to the downside. And you can use these strategies by plotting these areas on your chart to see where to enter and exit trades. So let's look at that next. I would suggest when you're plotting or charting support and resistance areas that you start on the higher time frames. Start on the monthly, chart your areas. Go down to the weekly time frame, chart your areas. Go to the daily time frame and chart your areas of support and resistance. So let's start on a monthly time frame. Expand your chart by scrolling your mouse wheel button. You can actually make your candle smaller or bigger by expanding the price area. So first thing you do is you go and click on your Trendline Tool. You can select a horizontal line. So look for areas where on the monthly chart it has touched a couple of times, and you can see that we've had a close here and obviously an open there, but we've had no other opens or closes close to that point. So I'm not going to mark it on the monthly chart. There you've had a open of a chart and you had a close. It's close to that area, not quite. So on a monthly or a weekly, I'd like to see 3 or more candles touching the same point so that I can mark out that area. Let us go to the weekly time frame, and here you can see that we've had multiple areas touch on the weekly time frame. We've had 1, obviously 2 opening there, 3, 4, 5. So what you do is you click on your horizontal tool and go to the area you want to plot out. Just click on it and it will plot it out. I like to plot or chart my weekly areas of resistance and support in yellow so that I can distinguish which are the higher time frame areas. The higher the time frame of support and resistance, the more likely that area is going to be respected, or the more likely the price is going to reverse at that area. Let's look for another area on the weekly time frame. Obviously you've got some closes on a bullish candle and opens on a bearish candle, and those prices have wicked to that point very nicely. So I'm going to chart it there. You can refine these areas by using the daily and 4-hour time frames to find very specific areas. Once you've charted your resistance areas, it's always good to look left to see where the price has respected. And you can see there was a touch, a close of a bullish candle and an open of a bullish candle at the same level. At the same time here, there was a close of a bearish candle and an open of a bearish candle in a very close range there. Looking further down, we can see there was a weekly level here, and I'm going to plot that on the chart. Looking here, I'm going to plot this level on the chart because I had touches there and there. You can also go to changing your candles to a line area to make sure that these areas have been respected. And you can see here, there I can refine the area, try and plot your lines to intersect with these reversal areas as many times as possible. Here you can see I've had 1, 2, almost 3. If I pull it down, it's not going to be quite accurate there. That one we've had 1, 2, almost 3, 4, and looks like we're going to have 5 with this weekly close here. Again, with this area here, we've had 1, 2 touches, and that confirms that that area is a good weekly support and resistance area. Next, we're going to look at the daily time frame, and let's start at the top. You can see here prices close and open once, twice, 3 times, and I'm going to mark that area as a daily support level. I'm going to change that to blue to distinguish between the weekly and the daily. Next level we can look at, we've had price respect quite a few times there, over there, going right through there and respecting there. So I'm going to mark that level as well. Next daily level that I can see is that we've had touches there, there, and there. So let's go and plot that. We've also had some levels touching in this area, over there, and over there. So I'm going to plot that area. You can always plot your lines very roughly and then go and refine to make sure that those lines are touching as many times as possible. Once again, go to the line chart to make sure there we've had a touches there and there, and actually refine this a little bit more so that we have as many touches as possible. There's an intersection there, there, and in those areas. Let's go back to the candles, find some more daily levels of support, and you can see on this weekly level of support we've got many daily touches, which means that that weekly area is very, very accurate. If we scroll left, you can see again many touches on that weekly area. Levels in between, there are a few daily levels that were touched over there. I guess we can chart that one and have a look at it later. And let's see if there were levels respected on the left. Yeah, there's an area there. That's a very good historical level. If we look left, touched quite a few times on the daily. So I'm going to keep that level. Going further down, I can see there's a daily level that's been touched quite a few times over here. So I'm going to plot that or chart that. And looking left, we've had it respected there and a wick touching that daily level. Now you can go and define or refine these areas to a 4 hour and a 1 hour, but then your chart starts getting very, very busy. So let's look at a couple of 4 hour levels. You can see we've had quite a few touches in this area. So I'm going to chart that one with a 4 hour, and I'm going to change it to an orange to define between the daily and the weekly. You can see there's a touch there. We could actually possibly even move this line down to this point because we've had quite a few touches. So these 4 hourly areas are to find areas between your daily and weekly areas, because price doesn't always immediately go to those weekly and the daily areas. So sometimes price hovers between the two, and you can trade on smaller time frames to see where you get touches on the 4 hour and the 1 hour. There's an area for the 4 hour, a few touches there. Just refine that. You can see there were touches there. If we look left again, very nice area of support and resistance. So let's look at the current levels that Bitcoin is trading at. You can see we've had quite a few touches in that area, there. So I think I'm going to plot that as a 4 hour area. We've also had multiple touches in this area, so I'm going to mark that as a 4 hour support. So you can see that Bitcoin currently has been ranging between this weekly resistance and this weekly support. So what a lot of people do is they go and plot a area that it trades in. So I can pull it all the way down to the wicks at the bottom and the wicks at the top. You can see very clearly after this December the 4th dump, wicking down to the weekly area, we had a push up, very fast push up right past this daily area, coming down, wicking down and supporting on the 4 hour, coming up to the weekly, just past the 4 hour, coming down again, respecting that daily level, up again to the weekly level, down to the 4 hour, up past our daily level, coming down again, coming almost respecting that weekly area again, breaking and bouncing, and then breaking that daily area, bouncing off the weekly, and so on. You can see that those levels are very well respected. Coming up again, touching that daily and 4 hour area, again testing and rejecting, very strong rejection. You can see there's a shooting star candle that rejected above the previous high, and I'm going to talk about this in subsequent levels on how to trade that. And yesterday rejecting all the way down to our weekly area, wicking back up, and now going to our 4-hour area. So the way that you can trade this is, and I've been trading Bitcoin like this the past couple of weeks, and especially Ethereum as well. You can look where the points of resistance are and enter a short trade where there are points of resistance. Don't enter a long trade where there's resistance, because it's likely to reject. It doesn't work 100% of the time, but most of the time you're going to get a rejection at areas of resistance. Most of the time you're going to get a rejection at the points of support. So I wouldn't enter a short at this point. Why? Because historically Bitcoin has bounced very nicely, and if you look back on this weekly area, we can see again there's an area of support here and it's bounced there. So what I do is I long into support and short into resistance. Don't long into resistance and don't short into support. That's what most new traders do. They see price coming down to this point. They might have bought at this point over here, and they sell their Bitcoin, and what the whales do is they buy your Bitcoin that you let go at this point at a discounted price. So that's the basics of how to find support and resistance areas. If you like the content, please like the video, make sure to subscribe and click the bell icon so you can get notifications of videos that are upcoming. And in the next few weeks and days, I'm going to be posting videos on how to use these support and resistance levels to find confluence to enter and exit your trades. So please be sure to leave me a comment in the description if you like the video, or if you've got any other questions regarding support levels, and I'll try and answer them in subsequent videos. Happy trading and happy new year for the next 2 days, and I hope you have a great year of trading ahead.